Hey everybody, what's going on? It is James here with Crypto Common Sense, and I have a trade lesson for you today. I'm just going to talk about trading in general. I'm going to talk about your main job as a trader, because I think most people, when they're starting out, I think they forget what their actual job is as a trader. So we're going to talk about that in this video. Before I jump into the content for this video, make sure you take a moment now to hit the like button, make sure to subscribe to the channel, and make sure to leave me a comment. I want to point out that what you're seeing here on the screen, this is a screenshot after I got finished with the video. I'm going back now to add this section, and every one of these red marks is an area where I had to edit that video because I maybe dropped an extra swear word, or maybe I got tongue-tied when I was talking. Maybe there was some noise that popped up around the house. Maybe there's some noise outside my office window. Whatever the case is, those are all edits. And so when I do a video that takes maybe it's 10-15 minute video, that video takes easily 1 to 2 hours to shoot, edit, and then actually get uploaded to YouTube. So make sure and take just 5 seconds right now, hit the like button, hit the subscribe button, and leave me a comment so that it justifies the amount of time and effort that goes into these videos. And now, back to your regularly scheduled program. Before I jump into the content, please do me a huge favor, hit the thumbs up button, make sure to subscribe to the channel, and don't forget to leave me a comment. The more comments I get, the more videos I will do. All right, so your job as a trader, what is it? Seems like most people, at least when they're starting out, tend to believe that your job as a trader is to predict where price is going to go. So, we see a lot of people on social media, myself included, making price predictions and posting charts, and Bitcoin is going to go here and Ethereum is going to go here, and this looks like this and this stock's going to do this. That's all for fun, guys and girls. It's all for ego, right? It's all about that ego boost. And in the case of some people, it's all about business, meaning that, they're an analyst. It's what they do for a living. They go on TV and they analyze things. Or they're an analyst and they sell programs, which I'm not knocking, right? They're an analyst and they sell trade calls and they sell trade programs and stuff. And so if they can post public calls, especially if they're right, it builds a lot of credibility so that they can then sell their products. I'm no different, right? A lot of people who have joined my trading courses, a lot of people who have joined my paid programs probably did so because of some call that I made on YouTube or on Facebook or on Twitter where I said this was going to go to X price. For example, in 2020, I had a huge boost in membership right around the first quarter. Why would that be? Well, it's because for 9 months, I said I thought Bitcoin was going to go to $4,000, and then it did. So, of course, everybody's like, oh my God, I got to go learn from James, right? Then I was wrong about the bear market, and so guess what happened? My membership dwindled down because people didn't like the fact that I was wrong. And when I say dwindled down, I mean new people coming in the door. I just want to point out that you need to be aware that when people are doing that, that's because they're doing it for a living. They're doing it as part of some type of financial, I don't want to say scheme because it makes it sound dirty, but yeah, I mean, it's part of a financial plan or something. And other people are just doing it for fun. But my job as a trader and your job as a trader is not to predict where price is going. It's to simply find the trend and trade that trend. That's your job as a trader. We don't care whether or not, for example, Boeing, I don't care whether Boeing is overvalued or undervalued. I'm not investing in Boeing on this particular day, right? I took a trade. I took a short trade on Boeing on the open of the market today. Why? Is it because I hate Boeing? No. Is it because I think Boeing is going to $1? No. Why did I take a trade on Boeing? I took a trade on Boeing because it looked to me like it wanted to break underneath this range. It looked like it was, ranging sideways, looked like a descending triangle, and it had a tiny little gap when the market opened. So I took a short position on this. My job is to try to find the trend. In this case, I thought this was a downtrend. I thought it was getting ready to break out to the downside. My job was to take that trade and write it down. Let's take a look at Bitcoin. My job right here was not to say, well, I think Bitcoin's going to be worth $68,000 in a couple days. I think it's going to a new all-time high. No, that wasn't my job. My job was to say Bitcoin is trending up on this smaller time frame. Bitcoin is now consolidating on this smaller time frame, and Dow theory suggests that an asset wants to stay in its trend. Kind of like I always think back to physics, right? An object in motion wants to stay in motion. An object at rest wants to stay at rest. Well, markets want to trend. So if they're moving up, they want to keep moving up. It takes an event, it takes something special, somebody taking profits or whatever, a whale, whatever you want to call them, to shift that trend back down, or simply an exhaustion of the buyers. There's a few things that can happen, but essentially we should look at this and say, okay, it's moving up, it's in an uptrend, it's ranging sideways. Statistically speaking, this should keep going up when it eventually breaks out. It doesn't mean I should just randomly long the range through here. Obviously, I want to wait for some type of signal that it's breaking north. Well, we got this. We got this full body candle right here. It was about a $275 candle. I don't know what the volume looked like. Let's put it on there. And not really much volume on it, right? A little uptick in volume, nothing too spectacular. But we had the breakout of the range. We had a wide body candle. It was just before the daily close. To me, that's a reason to get long in that, because I know that, hey, this should trend up. I don't care how high it's going. My job is not to care. My job is to simply get into the trade. In this case, I get into a trade, set my stop down at the bottom of that candle, because if it immediately reversed, then my idea is wrong, and at least have a 2-to-1 profit target. And there you go. And in this case, it trended really strong, and this would be one that you could probably ride up a bit, right? If you're just doing something basic like moving your stops to the low of each candle, it didn't take out the previous candle's low until about right here. Okay, so if you set your stop loss here, came over and dumped down through that candle. Well, there you go, a 5-to-1. So let's say you had a smaller trade fund, maybe you're risking $100. Well, there you go, $500. How long did it take you to make it? What, an hour? 55 minutes. There you go. That's your job as a trader. Your job is not to know where Bitcoin's going to be at. Your job was not to say, well, I should long this at 63,000 and I should ride this to 68,000. You didn't know it was going to 68,000. Nobody did. Everybody can pat themselves on the back and say, oh, I called that, I called that, I called that. And I'm guilty of this too, right? Oh, I called that $4,000. That's great, but that's not trading. That's analyst, right? That's analyzing. It's very different. It's easy to make those calls. It's something entirely different to put your money where your mouth is. So just keep this in mind. Analysts are analysts, traders are traders. They're different jobs. And sometimes a trader is an analyst, right? So for example, me, I do a lot of videos. I talk about markets. I do make market predictions from time to time, and that's fine, but that's in my role as an analyst. That's not the same thing as being a trader, right? As a trader, my job is to find the trend and trade that trend. If I see an uptrend, my job is to look for longs. If I see a downtrend, my job is to look for shorts. My job is not to constantly search for the reversal. Doing that it's a disaster waiting to happen. Okay, it really is a disaster waiting to happen. Now, as an analyst, totally different, right? As an analyst, I'm looking at this market for the last year going, this is going to end badly. This is going to end badly. But you can't just sit and never take a trade long because you think the market is overvalued. Just like you can't sit and be afraid to, short a market just because you think it's oversold. A weak market is often worth shorting, just like a strong market is often worth longing, even if they are overvalued, even if they are, undervalued, it doesn't matter. You look at a coin like Shiba, which I picked on last week, and yeah, I think it's absolute dog shit, right? I do. I think it's a dog shit token. I don't think it has any real use case. I think it's a meme coin. I think eventually it's probably going to end really badly, and that it will probably go back down to nearly zero. Does that mean you shouldn't trade it? No. There's all kinds of trade opportunities in this thing, right? I've talked about this in other videos, so hopefully I'm not beating a dead horse here. But look, forget the range down here because, that was obviously not a momentum trade. That was a breakout trade, which I've talked about also. But right here, you look at this range here. The analyst says, well, this thing is up, almost 600% with no decent correction. This thing is overvalued. And it's probably going to go down back to this level at some point. True, right? I believe that then. If you had me look at it, I would have told you that then. And if you had me look at it now, I'd say the same thing. It's probably eventually going to go back down to the top of this range. However, The trade through here was not to short Shiba. There was no short here. Shiba was moving up. That's an uptrend. Shiba was consolidating. Markets want a trend. If it's moving up and consolidates, more often than not, it moves up. Whether it's up, a bull flag and up, whether it's up, a triangle or a pennant and up, whether it's up and a rectangular range and up, it doesn't matter. More often than not, market's going to break up. So when this broke north, this would be a reason to get long. Obviously, that candle right there is pretty sketchy. Had some good volume, but I wouldn't really call that buying volume. Most of that was wick. So this would be a pretty tough trade to take looking at a daily chart. The 4-hour chart may have offered a little better view on it. See, now you get a different view. So you look at that daily chart and it's scary. You're looking at it going, ooh, I don't know about that. Look at that big old wick, right? Ooh, that don't look good. But look at the 4-hour chart. So had a breakout, came back down, retested the breakout, had a huge demand tail, right? Little inside candle, another candle. I wouldn't call it inside, but inside this larger, tail here. If anything, you could have gotten long on the close of this red candle with a huge demand tail. You could have been a little more conservative and said, I'm gonna wait a minute, right? See if it breaks this high. Then it puts in an inside bar. Bears couldn't take out the low, so maybe you got long here, or maybe you wanted more confirmation. Now you've got a railroad track, right? Down and right back up. This is bull strength, so maybe you long it here, right? A few different ways to play that depending on how aggressive you are. Or maybe you were just super conservative and said, I'm not going to long it unless it takes out this high. Fine. Well, it took out that high right here. Or maybe you said, I'm not going to long it unless it takes out this high and retest it. Fine. It took out that high and retested it right here. You see what I'm saying? All of these were reasons to long this. It doesn't matter that it was overvalued, in my opinion, or that another analyst thought it was overvalued. It doesn't matter that you'll see articles coming out from places like Motley Fool saying that you shouldn't own any Shiba. Well, I agree. Long-term, Shiba is probably not a great investment, right? I personally wouldn't want to have a bunch of money in this. If you want to throw a gamble on it or something, hey, that's your business. But would I say that it's a legitimate investment with good, strong fundamentals? No, it's not. But through here, these were reasons to long. Last week, I did a video talking about how this was already dropping and how people were wanting to buy it back up, and it was retesting what I consider to be a bearish triangle. And I said, look, this is a big red flag. This was moving up, it consolidated, it should have moved up, but instead it moved down. This is not something I'd want to long here. In fact, this is the place. I remember my words were something along the lines of, this is the place where traders will normally look to go short. Right there. Where is Shiba since then? Well, it fell about 16% from that white line, and if you went all the way to the top of the wick up there, about 19%. Pretty damn good trade opportunity. Doesn't matter whether or not you think it's going up or down long term. What matters is there was a reason to take a short position. And your job as a trader is to take trades, not make investments. You can invest, but it's totally different. That's not your job. Your job is to trade. So I wanted to do this video and just, first off, I wanted to make the reminder that this is your job. Your job is not to make predictions, but also I wanted to show you some examples of how this is trading, guys. It's dead simple. Market's going up, look for reasons to get into a long. Market's going down, look for reasons to get into a short. So I'm going to go ahead and wrap the video up there. I wanted to try to keep it short. I hope you enjoyed it. Make sure you do give it a thumbs up. Make sure you do subscribe to the channel. Also, don't forget to join the Patreon. It's just $7 a month. If we can get that popping and get a nice community going, then I'll start working on getting some tools developed that everybody can benefit from. And before I forget, let me reiterate that I am some guy sitting in a spare bedroom, which means that nothing in the video is financial advice. I am not a licensed financial advisor. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, the Forex markets, or precious metals. As always, this is James with Crypto Common Sense, reminding you to please trade safe.